Bloomberg's Liana Baker, shall we? Joining us now with more. Walk us through that story. We learned a lot over the weekend, didn't we?
The question on everyone's minds this morning is, how did this unravel so quickly? Sources tell us that there is going to be a board meeting later this week where some of the dissident investors like SoftBank and those aligned with SoftBank will try to oust Adam Neumann, and we'll see how he reacts. Does Neumann, the founder of this company, step aside gracefully and take an executive chairman role, or does he have the fight for his life? The company is really at a crossroads, and if this all sounds familiar, is because it went down at Uber about 2 years ago, where some of the investors ousted the charismatic CEO. Benchmark is one of the same investors in Uber, is also in WeWork, and it really will come down to whether, Neumann is able to hold on at this point. This all started earlier last month, where investors finally got a look under the hood at WeWork's financials, and they didn't like what they saw, and they called for corporate governance changes. The company has made a lot of changes, but it just wasn't enough.
I think there's a lot that they don't like. Great to catch up with you. Santosh Rao dropping by the studio to weigh in on this story. Manhattan Venture Partners Director of Research. Santosh, you help facilitate some of the investments in private markets for companies that are about to go public as well. We usually talk to you about the path to profitability. I just want to talk about the path to going public. What does this company have to do now?
Well, this company has to come off the table. They have to redo the whole thing. There's a domino effect going on. We don't know what else is behind all this. So I think they have to just take a pause, rewrite the narrative, and then come back much stronger with a much stronger corporate governance structure, much better management structure. And he has to go. He has to just come out of operations, should not be there. He got the benefit of doubt. He blew it. So I think at this point, he just can't come back.
Do the existing governance issues complicate their ability to get rid of him?
Yes, I think there are some clauses where he needs to be when there's change of control. I think there's some debt issues, governance issues, some implications, financial implications. So he needs to be around. So executive chairman sounds right. Kind of move him out of the day-to-day operations. Get him right. If not eliminate, if not just fire him. I don't know the extent of his misdeeds, you can say. So we'll see where it plays out. But at this point, he's in the penalty box and really needs to stay there for a while.
Santosh, you used that word, narrative. Is there a narrative that this company can deliver and sell to public markets when in private markets it was so steeply overvalued by SoftBank?
The private market valuation was totally detached from the fundamental value. I think close to 20 billion, 25 billion, which is what we did when we initiated coverage a while back. I think that's where you can justify it. They have some good assets. They can grow into it. But at 47, it's just out of the question. It's just too much. I don't know what happened towards the end. But I think even SoftBank's blended cost is around 25 to 28 billion. So even if they can come around there, they'll be okay coming out at that level.
You haven't participated in this, in any of the rounds. Why not? What held you back? What didn't you like about this company?
Well, first of all, we are a TMT shop, so this is a real estate play, and we did not really like this fundamentals. We don't go there. But, we look at everything. If it's a good value there, we would get in. But in this case, it just did not make sense. It was not in our wheelhouse. Plus, we just didn't like the valuation at any point.
John, I'd say, as Santosh said, this is a REIT.
Exactly.
It's a REIT with an unusual flavor, and we're a commercial lender. We do a lot of lending in commercial real estate. You need net income. And if you're not able to produce net income, you're not a tech company, you're a REIT, and the valuation, that's, I think, the major trouble.
The only tech part of this is they have tech tenants. That's the only tech part about this. So it's really not a tech company in any sense of the word.
Chris, just to get your thoughts on this, you understand the real estate market really well.
Sure.
The impact of these work share companies at the moment is huge. The biggest occupier of private office space here in the United States now is WeWork in New York specifically, for New York. Does that concern you, the outside impact that some of these companies are having?
Well, it's certainly going to have an impact. I think as this story plays out and we see what the capacity is, there's a lot of capacity for shared workspace. What's the demand there? And the demand and capacity have to get into alignment. In a market that's as big as Manhattan, you'll have maybe an issue in certain neighborhoods or certain buildings, and it'll have to sort itself out a little bit. But I think fundamentally it's grown to the point where we have excess capacity. When you have excess capacity, you're going to have per square foot rents drop, and it's going to have to sort itself out.
It's hard, Santosh, to talk about this company without getting deep into the realm of speculation, but to round things out with you, is this company going to be around in 2 years' time?
Yes, it will be. I mean, to the extent you believe in mobile workspaces, satellite offices, flexible leases, I think it's a lot going on. Companies have to pivot fast. They don't want to sign long-term leases. In that sense, it makes sense. They have good properties. It's a global play. So I think it'll be around at the right price, at the right valuation. It can grow into it very well. So I think the fundamentals are good at a much lower valuation.
Santosh Rao, always great to catch up with you on some of these topics. Alongside Jill Kerry Hall, thank you very much. Scott Mayer, Mike Schumacher will be sticking with us. Up next, US PMIs. That's next. This is Bloomberg.